Hey guys, how's it going? This is our market outlook video for the week coming. We usually do this as a live stream and then I'll post a video later, but I've been a little sick the last few days, so I just decided to go ahead and put it out like this. I appreciate you guys bearing with me here. My voice is a little shot right now, as you can kind of tell, but what I wanted to get into is that this is going to be kind of a big week. And we got some key areas that we want to look at, some possible plays, and we just want to try to get prepared and get you guys prepared for the week coming, right? With starting out doing that, let's first look at what's happening this week. The first thing I want to point out, so the SEC is expected to greenlight the spot Bitcoin ETF by January 10th. So that's the deadline. So if you're looking on some economic calendars, you can see that between, it was like maybe the 5th to the 10th, they have it marked out spot Bitcoin ETFs. But what we do know is the deadline is the 10th before they got to give that decision. So we can expect by the 10th that we should have this decision. So expect it anytime between Monday to, that would be Wednesday, I think. If we get that, that could be very good for things like Coin, Mara, and not to mention the ETF itself, but just crypto in general, you know, gives it more of an air of authenticity and makes it more available for people to trade on. You know, it's just good news all around, really. Some of the other things we got to worry about is on Thursday, I think it is, CPI. So let's just start here at the beginning of the week and we'll run through them all. Starting with the 8th. I don't really see much here except for the consumer credit, which is coming out, it looks like, at the 3. And then, then Fed Bostic speaks. So anytime one of the Feds speak, I always look at that as a chance that they could say something to move the market. So I just pay attention during those times. You know, this is going to be at 12:30 that day on the 8th. And then right at 3, we'll have the consumer credit. Now on Tuesday on the 9th, the U.S. trade balance. So usually if this isn't in red or orange, I don't pay it too much mind unless it's something I'm looking at for a specific sector. But U.S. trade balance and this right here, the U.S. 3 note, those two things, in my experience, can move the market in some positive ways, especially in a week like CPI, jobs numbers, stuff like that. So on Tuesday, we can look forward to either, you know, the Bitcoin decision, U.S. trade balance, or the 3-year note. Now on Wednesday, remember this is the final deadline they have to make the decision by this date. No later, not on the 11th, 10th, or before. We also have some mortgage stuff, which could be good for the real estate sector and the bank sector, which that will come into play here in a minute. The reason why I'm looking at this week is we have some earnings coming out, and it's going to be a real doozy because not only is it the kind of start of earnings season for this quarter, but we're leading off with some major banks in there that is really going to kind of set the stage for everything. And we'll go over more of that here in a minute. Also U.S. wholesale inventories and crude oil inventories. Again, crude oil is something we'll go over here in a minute too. And U.S. wholesale inventories, not so much, but we're kind of looking adjacent to that with one play. And the 10-year note. So I said we mentioned the 3-year note up here. The 10-year year note is on Wednesday. Then on the 11th, we have jobless claims, CPI, right here, and the 30-year bond auction. So this is not a note, but it's the bond auction itself. This is one I'll be watching also, dealing with the banks and stuff, especially since Friday we have BlackRock, Bank of America, Wells Fargo, and JP Morgan and Citigroup all filing their earnings on Friday, right after we have these bond note auctions, and the U.S. mortgage rates. See what I mean by it's going to be a doozy, man? It really is. And the U.S. federal budget balance, but usually, I mean, this is just going to be more on top of everything else. So, yeah, I'm not going to really follow that too much. Oh, and then also on Friday is PPI. So, one is supply side of it, the other is demand side of it. We usually get CPI and then PPI, and that gives us our supply and demand. And there's some more that comes in with the IMS stuff and all that. But this is our initial look at what's going to happen. And guys, if you don't think it means nothing, let me show you what the feds are saying right now. So if you guys don't know, Selene Algo has its own Twitter page here that gives out some pretty decent news, and it's got some cool little features I'll show you right here. But also, guys, if you don't know yet, I'm now streaming over to Selene Algo Discord server. We are doing things like the classes again. We're going to start those up. We're going to try to do at least once a week, but, we don't want to run it into the ground just saying the same stuff over and over again. So we're going to do it, kind of mix it up with some of them are going to be classes and some of them are just going to be like outlooks or looking at specific things or, questions and answers, that type of stuff. And we're also going to be doing the weekly outlook or state of the market stuff like we used to. That'll be out every week, and that'll either be a live stream or a pre-recorded thing like we're doing now. So now going back to this, let me find this here. Dallas Fed president says rate hikes are still on the table. Right? Federal, no, that's different. It's for Boeing. It's for later. Let's see, there's another one here. Fed Logan won't take the possibility of another rate hike off the table. Now, guys, a lot of this rally has been on the assumption that they're going to start lowering rates at the beginning of the year or near the, probably within the first quarter or two, right? What happened if they raise rates again? I mean, we're not out of the water yet, and they keep trying to tiptoe around this, and it's just dragging it out so painfully long. And I've got some stuff to show you with the SPY that is kind of bearish, but, I don't like to predict as much as I do like to react. So I want to show you what I have there and show you my levels, and I'm just going to wait for those levels to get hit, and we'll go there. Well, one other thing we'll look at here too is Boeing, because if we look, federal officials order grounding of Boeing 737 9MAX jetliners after a plane suffers a window blowout. Alaskan Airlines incident is another blow for Boeing. You can see how this news scanner is pretty cool. It gives you a sentiment analysis. Also gives it a rating, and then you can see right in here it gives like possible tickers it could affect. It's pretty neat. So let's start running down. Okay, so what's interesting about the SPY here is, guys, this could just be normal healthy movement right now. I mean, you can look, I have Selene Algo set up, so when I'm looking further out, so the settings here I have on Selene Algo, when I'm looking, further out, like we're talking about the 4 hour, the day charts, possibly the 1 hour, is I use traditional, which was advanced previously, and I use balance. Sometimes I use scalping if I want to get, looking at the 1 hour, the 4 hour, I'll leave this on traditional and put it on scalping, but most of the time it's just balanced. And for you you guys that don't know, this bottom one I have is just a normal Stoch RSI. I've not changed any of the settings on it. It's just simple Stoch RSI. Okay, so what we've had up until this point, we've had a run up on SPY, and things have been pretty bullish. We pretty much got back to our previous levels before the bear market. I think it was at 479, 480 originally, and we got all the way back up to right around 478, 479, something like that. We just got right at it. Um, previous level, you can pull out here to the week and see. That's what's a sell off. Here's where we're at now. So anytime we come up to those levels, we usually see a little bit of resistance. And it's just normal, healthy movement after a run like this. So when does it not become a normal, healthy movement? Well, once we get back into the previous distribution levels and it breaks those, right? In this case, it's our 50 moving average. So on this day chart, we're going to look at our 50 as our return to the mid, right? Return to the median. Normally you do that with a 20 SMA or an MA. But we're looking at the day chart here, and the SPY runs usually with the 50 MA or the 200. So this is the good. It also matches up with the previous distribution levels, not only here, but back here too. So as long as we hold this 50 or right around this yellow box I have drawn here, there's a better shot of it, which is currently around 158.19 to 159.74. So as long as we don't break out, especially this volume profile level here at 454, I think we're good. And we could possibly see a return to that if we look at other things like Max Pain. So I'm going to go out to the monthly. And the reason why I'm doing that on Max Pain is because when the top dogs, the smart money, when they play options, usually it's a monthly option, whether it's a call or put. So we can get a better look at looking at the monthlies. Plus, I'm going to show you something when we're looking at the dailies on them or the weeklies. It can show a pattern once we put it all together, I guess you could say. So our max pain here is 457. Some of the others I looked at about 455. I haven't seen one that's at 430, but I think that's way too low. It doesn't necessarily mean that it's going to hit this, but when you see, I think I seen it was like a 5% deviation from max pain, then usually you can start to expect it to, again, return to the mid, right? Return to the median. Kind of cool off and get back there. And it's not just this max pain. We can see that the markets are kind of bearish right now, and usually that means dumb money when you're talking about the dailies or the weeklies. But when you're talking about the monthlies, that's smart money in there as well. Here. So this is kind of your max pain when you're looking at the money put in, the amount of money coming in with these options and stuff. You can see that this is crazy on the call side. So when market makers see that much money go to the call side, usually what they'll do is they'll push or do things that will have the markets kind of even out and back down. That way they can get that money in, even if it's just to kind of wick down, take it out, you know. But they will take out all that money within that level. So if it comes down to max pain, the max amount of money is lost to the people holding these options. But the most amount of money is gained from the market makers who made those options, who hold those option calls. But so this is the level I'm looking at. Now, to see if we hit that level, let's look at the 4 hours so we can get a better, more detailed look. Now, we can see on this, we're pretty much hovering right around the 50. So what I'm going to be watching for is right now what it's looking like as we dip back down into the bottom level of this distribution level right here, this fair value level, as some call it. It looks like we've dipped back down to that. The dip got bought up and we're coming up. And that's true to an extent, but we're still not out of the woods until we cross back over the 50 on the call side. So that 50, that green line, that 50 EMA, That's going to tell us whether the market's going to sell on off, or if we're going to try to retake that all-time high, or at least push toward it again. So if we reject here at the 50, we are probably going to keep coming and pulling on back to this yellow line here, which is, let's call it 460. And we're looking for either a break above or rejection of, right? But look at this volume profile right here. There's nothing underneath it. If we reject again, there's nothing down here. They don't see any value in this area. So it's either here or here. We have the ADX, the MACD, and the Stochs RSI all saying, whoa, we are oversold. We are at this point where we need to cool off. So we need to either chill, go sideways, or we need to sell on off and get further back down to this other fair value point. But that's my opinion on the SPY. We can look at Apple, and it's pretty much the same way. It's either got to bounce right here in this yellow box I have, or it's going to pull back to this previous level, volume level, which is give or take about 176. Trust me, if it gets down to 170 or even under, I'm buying monthly call options on it. That is a phenomenal price for Apple. Amazon, I'm actually holding calls on Amazon, but it's dependent. So you can see it's come back down into this range, the bottom part of the range. That's where I got my calls. But you can see that we've kind of bounced off this. Now, if we don't continue to break EMA levels, then I'm out. So I'm looking for the break of this 9, a break over this 9. And then, expect maybe some stair stepping going on, like a break over the 9 to the 15, reject, bounce off the 9, break over the 15, go to the 50, just like that. So that's what I'm looking for Amazon again. So we seen earlier that we had some old numbers coming out, and I've been watching Exxon. It's kind of interesting. I mean, we are at the top of this previous distribution level here. If you look right here, we're at the bottom of this one. You can see that previously, going back to about the beginning of November, every time we pop above it, we come back to it. We tried to go below it and came back to it. So right around this point of control, this point of interest rate, that is where our sweet spot is. We could expect to see a break below it and come back here and bounce. Or if we see this break above it, what I'd like to see is a break above it. You could maybe enter with about 20% of your trade, and then we want to see it come up to about this level, pull back to the 200, bounce off of it, take off. This is where we're going to start to see EMA lines crossing. Look right here, we've already got the 9, the 15, and the 50 all right here, but we're underneath the 200, which means overall we're still bearish, right? So I'd like to see a break over those and see if we can start trading above the 200. Then I'll enter with part of my trade, wait for the pullback and bounce, and I'll enter with the rest of it. Kind of buying the dip as it goes up, so to say. Spotify is another one I'm looking at, mainly for the same reason. It was flagged out. You can see this pennant that come down here as Celine drew. Celine is also giving the long signal off of this bounce. Look at this, MACD cross good. We are breaking out. This is the classic bounce up. I would have liked it, caught it back down here, but I caught it right as it was crossing this 50. I'm in it. I didn't sell at the top of this. I held through it and actually picked up another one Friday. So we'll see how that goes on that. As long as we can continue to start making higher highs and higher lows, I'll stay in it. But you can see we're right at this point of control, this red line right here with the volume. So my next spot I'm looking at is 198, but I got these out to the monthly, so I don't want to see too many more pullbacks before we get to that 198. I wanted to kind of go straight there almost. I was talking about Boeing having a pretty bad week. As we can see, it sold off, but it seemed to catch it in this area right here. And what does that mean? It could just be exhaustion from the sell-off, and it's just doing a healthy movement, that return to the mean. Right, we're returning back to the mean, which in this case, since we're looking at the 4 hour, it's the 50, right? You can see it return back to the mean and then a sell-off back to the 200. Just depends on how bad this news is really going to affect them. If the news stays bearish, that's what I'm looking at. So you see this distributed right through here. I'm looking for a break of this lower point here, and that's where I enter. If we get a good candle pattern at the rejection off that 50 or 15 right here, I may even enter there. But if we don't break through this bottom level, if I do enter early and we don't break through this bottom level, I'm cutting my losses. The other thing we was looking at is earnings. And the only two things I'm worried about with earnings is Delta Airlines and all these banks, Citi, BlackRock, Wells Fargo, Bank of America, and JP Morgan. All of them. Let's look at Delta. Depending on how that Boeing news affects airlines in general, the travel sector is actually looking pretty decent right now. We can see almost all of them has shot up like a rocket, has pulled back, and bounced off of key areas. This is the 15 to 200. American Airlines done the same thing, pulled back then. So this is a whole sector movement. So looking at this week, I'm going to be bullish on travel, especially Delta, where it has earnings. And I'm just going to see how it goes. If I start seeing good signs Monday, I may jump in early and play the run up instead of actually waiting for earnings itself. So we looked at travel, we looked at Delta. Let's get to the elephant in the room. JP freaking Morgan, right? Now, banks, a lot of people right now, like we was talking about with SPY, they believe that they're very bullish in some cases, and they believe that the rate hikes are done with, which is kind of bad news for banks in some situations. But also, we've just seen that the feds are possibly talking about a rate hike. It's not out of the realm of possibility for them to do a rate hike. And one of the things that bothers me about this whole sector right now is, let me show you a few of these and see if you notice a pattern. Here's JP Morgan, here's Wells Fargo, here's Bank of America, here's Citibank. Did anybody notice anything about any of these that is sus? They have been running super hot. Every one of them are up and gapped up in some cases. So that worries me. You know, nobody likes to try to get in at the top and hope it's going to keep running. Let's first talk about JP Morgan in general. So we've broken, I don't know if this is all-time highs, but it's definitely all-time recent highs. We can see how it's broke over. I mean, look, do you even see a red candle on the weekly here? But on the daily, yeah, there's one or two in there. Look at that run-up. That is hot, and that's on the weekly. That's on the daily. That's since October 23rd. Banks has been on a run. So I just don't see they can keep this up and come out of it. If it is good earnings, we could go on a little bit of a rally, but I would expect at least somewhat of a sell-off for a cooling down period. Yeah, just with something like that, I don't feel comfortable entering calls. But if we start seeing signs of weakness, if we start seeing it break the 9 and the 15, or if we see the whole sector starting to pull back, if I play, I'm either going to play the Spider ETF XLF, or I'm going to play something like Wells Fargo or Bank of America. Wells Fargo is one of my favorites. It almost reached the top of this. This is set up I've been using. It's worked out great. I did draw a bottom one here where we did break out, but this is the region I'm mostly looking at, these top two lines. Now we kind of pulled back. We wigged down to this one, what was resistance, now support level. So it's looking for a breakout of this 51. So what I'm starting to see is possible range forming between 48 and 51. If it starts looking good, we continue this bounce off. If we go for puts, I'm not going to jump in unless we break the 50 or this line here. What we could possibly see is a pullback to here. That would fill this gap right here and allow us a clean break upwards, or bounce upwards, not break. And that would look like some really good healthy movement from the stock itself. But that's what I'm going to be playing. This is Wells Fargo. If you have any questions, you can always ask me. DM me, at me, come in live trading, whatever. Don't be afraid to talk and ask, and just come in and hang out with us. I usually call out a few trades every day. We'll talk about certain stocks, what we like, what we don't. We even kind of do real-time DD sometimes, just kind of looking at things. But the more the merrier, it helps when people come in with ideas and stuff like that, and we can break them down in real time and see. Or if you just want to come in, sit and chill, a lot of people do that. They won't even talk, they just come in and listen. You're welcome to do that, Mi casa es su casa, right? And we'll be doing this every day this week, live trading. Thanks for joining me, guys. If you appreciate what I'm doing, hit that like and subscribe button. It helps out with the YouTube gods and all that, right? We'll see you Monday.